The worst mistake you could make is be aspirational to grow, bring a bunch of people on, but not have the infrastructure to be able to handle it and to be able to make those people feel comfortable that they can meet those client needs. And frankly, that is part of putting the two firms, Bison Wealth and Bison Advisors, together to make sure that instead of having two adequately staffed people, we have one supremely staffed group that can really handle the growth and frankly handle what we're entering into, which is much more of a hockey stick moment.
Hey everybody, welcome back to another episode of The Connected Advisor. I'm your host, Kyle Van Pelt, co-founder and CEO of Milemarker. And today I am joined by Brad Ball. Brad is the founder of Bison Wealth, and he is an avid pickleballer, as well as a fellow Atlanta resident. I've had the great fortune of interviewing quite a few excellent founders here in Atlanta for this podcast recently, which makes me happy. But Brad, the avid pickleballer, founder of Bison Wealth, thanks so much for joining the show.
My pleasure. Nice to be here.
Absolutely. All right. I got to ask you, before I go into my first question ever, pickleball is on the rise. Pickleball is humongous right now. It's growing and growing. What do you think about these places that are popping up that are like, half pickleball, half bar, half social area? Is that the place to pick pickleball, or is that kind of like, where the casual laissez-faire pickleballers go?
Yeah, I think that's probably a little more on the casual. I think they're great for people who are just doing the social aspect of it, which certainly pickleball has plenty. I unfortunately tend to hail from more the competitive side, where it's a little more intense, not so much drinking and playing, more drinking after playing. But yeah, it's a sport that's funny because the original perception when I first saw it was that it was kind of passive and silly and social. And I've learned there are all different levels of the game. And again, it's a good way to get some good exercise and have some fun. So,
yeah. Speaking of all different levels of the game, it kind of reminds me, it's a decent segue into our industry. I feel like there's all different ways that you can grow and run a firm. So I want to get into talking about that with you. But before I do, I ask every guest the same question to kick off these interviews. This isn't going to be any different. So Brad, I've found after hundreds of these conversations that everybody has a unique path to this industry. And it might be a traditional path. You might be following in family footsteps, or you might have come in the side door. But whether it's traditional or untraditional, everybody has what I call a money moment. It's that moment where the light bulb went off and you kind of said, this is what I want to do. This is what I want to spend my career doing, helping people with this, helping people get quality financial advice. So Brad, for you, what was that money moment that led you to where you're sitting today?
Yeah, great question. And I certainly do. When I graduated college, I joined a firm that was a predecessor to what we know now as Empower. And I came out of college, bright-eyed, finance major, thinking I could be in all different ends of the finance industry. And of course, the first thing you do is you have to go to school and get your securities licenses and all the other education required to be in the business. And I was on the institutional side. So I worked with Fortune 500, Fortune 1000 companies, helping them with their pension plan investments and 401k plans, et cetera. And that's pretty intimidating as a young person. You're dealing with chief financial officers and HR directors. And, the interesting thing that I found was the training that I'd been given, which was actually really good, kind of a bit of an uncommon thing these days. But these people who I viewed as these sort of titans really did need the help that I could offer. And as a young person, I actually had the training and the ability to help them. What I realized is those people had to cover so many different areas in their corporation that they weren't specialists at the things that I was. And I could bring value even at a young age. And that's when the light went off that even these really accomplished professionals needed help. And so I immediately found myself smitten to it. Now, in that world, it was a little more diverse. That ultimately led to me moving more into the pure play investment management side of it. I happen to enjoy working with clients, but I really found the portfolio construction, the real sort of genius behind putting products together is something that drew me in. So I moved more into the investment management space, again, predominantly focused on institutional. And that ultimately led to one day realizing most every dollar comes into an institutional corporate pension plan, but it eventually goes back out into a person's individual account. And so I realized that that's really where a lot of people need help. So a number of years ago, started kind of turn our focus of building investment products for individuals. and ultimately decided to launch Bison about 3 years ago, trying to really focus on that segment.
Oh, that's incredible. That's awesome. You said something in there that triggered a light bulb for me that I just want to talk about, because I've heard a couple people say this, but you said, you had this really incredible training program while you were there, and that, maybe that's not so much the case anymore. Why do you think that is?
I just think that, the year of the person working for a company for 30 years and getting the gold watch at the end, or 40 years, has probably largely passed. And so I think the cost involved in training people and bringing them up is so high if you're not sure you can retain them for the long term. So I just think it's a difference. And I do think that in school and in colleges, instead of having all these general degrees, I do think people get a little more specific in their education. So probably people show up more ready to play. I would say we do training programs here. I know a lot of people in this industry aren't interested in people right out of school. And I can't say that we're going and recruiting advisors right out of school, because we're not. But what we are interested in is joining them with more experienced teams where they can learn from those people who've been practitioners for long periods of time, creating that natural succession planning. And I think the wirehouses have done that for a long time, but they do it more from only the strong survive. It's sort of kill or be killed, where I think ours is a little more nurturing, putting them on a team where people have a vested interest in bringing them along because they will eventually be their successors. So I'd say we don't just have a pure play training program where we start people and bring them all the way through, but we do in the context of making them have a friendly, safe environment as part of a bigger team.
Do you think that there's a couple of pillars of training, for lack of a better term, to make somebody successful, even if you're bringing them alongside a senior team, which I think makes a lot of sense? But, is it focusing on, here's how you run a plan, here's how we think about investment management, here's how you sell? Or what do you think are kind of the core tenets of training up a successful advisor?
I do. In this business, you see a lot of people who are really drawn to the investment management side. And that's great. We love people who have a passion for that. But the truth of the matter is, in the world of the way the wealth management industry has evolved, we really generally believe to letting the investment people be investment people and letting the advisors be advisors. And their value proposition is more interacting with clients, understanding their needs, helping them plan, helping them with a lot of things, including a lot of personal items, and maybe helping them through some family issues. And so we find that the day of the advisor sitting there behind the screen, picking the stocks and also being the planner and also helping them with a mortgage and sort of doing everything is really past. So what we really are drawn to is advisors who really understand sort of their client dynamics, who understand about kind of delivering a broad financial planning, investment infrastructure to them, and letting the experts in those other specialty areas. So as such, it does mean that these people need to be knowledgeable of all those areas. So there is training required to get up to speed, but they also need to understand that they make money for everyone, themselves and for the client, when they're able to spend time with the client. So it's really making them understand or practice management activities where what the things they should be focusing on that make everyone successful.
It's a great answer. So it makes me think about how you've kind of grown Bison to date. And I know we were talking a little bit about this before we hit record, but you kind of had a couple of entities that you're now merging together into Bison Wealth, and that was because of a couple different ways. But talk about that a little bit. You had Bison Advisors, I think, was one of the entities, and maybe Bison Wealth was already one, and you had a couple of these that you're now merging all under one brand. But talk a little bit about that evolution.
Yes, great question, Kyle. We did. You're right. And really, it wasn't necessarily intentional to start with two different brands, but we acquired a couple firms. And generally speaking, we have grown through three mechanisms: lifting wirehouse teams out, lifting more private banking teams, and acquiring independent advisors. And when we acquired two different firms, they both had very different DNA and background and go-to-market strategies. One was more people that were planning focused. They did a fair amount of insurance, annuity, wealth all together. They blended all those, and they really approached that whole solution differently. Where other firm that we acquired was traditional people that came more of a wirehouse background. So they woke up every morning to talk wealth, 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 and not some of those other things. So we started those two firms independently, leaving them independent: Bison Advisors and Bison Wealth. What we've learned along the way is that this industry continues to morph together. And I think we really do try to encourage advisors to think about the whole toolbox, about solving their client needs using all those products, that no one size fits all, that there are clients who need certain products and ones that need others and some that need all of those products. And so as we built these two firms separately, we started to realize that no matter how much you try and have them operate on the same path, they start to deviate. So we really thought now was the right time to pull them together, create more economies of scale, more efficiency, and frankly, just make them better advisors by being more well-balanced. So Bison Wealth is a surviving entity of the merger of those two together, and everything going forward will be branded as such.
That's awesome. Let's talk a little bit about those kind of three ways that you've grown. I mean, you've had incredible success pulling people out of the banking space, but there's no shortage of competition for those teams, for those people who want to come out. I think, that trend has been happening for a while. What is it about Bison that is helping you stand out to get these people to say yes to come into the Bison brand rather than one of the other many litany of options they have out there?
Yeah, again, great question. First of all, I think if you look at our DNA, the Bison brand is a joint venture between my management team and the Pagula family, Terry and Kim Pagula, their family office, East Asset Management. So I think right out of the gate, we have something very unique in that we're one single funding partner as a sponsor. We don't have a private equity fund that's trying to kind of make a quick flip on a dollar, put it in today, flip it tomorrow to make some money. We have a long-term patient capital stream of people who are a multi-billionaire family. What a lot of people don't know is they're the owners of the Buffalo Bills and the Buffalo Sabres, among a bunch of other things. So they bring a real expertise on family dynamics, on being in the oil and gas industry and many other industries, real estate. So having that as a chassis sort of behind us, that helps us really kind of understand the dynamics of the very highest end of the clients. Now, that's not to say that most of our advisors' clients are multi-billionaire families, because they're certainly not. But I think most people are aspirational. When you have $1 million client, they want to think about, do you have what it takes when I have 10 million? And the person who has 10 million wants to know that when I have 50 million, and so on. So when you have each of those different layers in there, you have the ability to, I think, meet those client needs. Now, directly answering your question as it relates to the private bankers, I think they're drawn to having that large capital stack behind you, that long-term patient capital. I think a lot of the people that come from the wirehouse world or some other areas, it's sort of mano a mano. It's them against the world. They build their book. It's all subject to them. So these people that come out of banks are used to having a big infrastructure, having some deep pockets behind them. So I think they find comfort that they have a big organization behind them with a large capital stack, not an underfunded organization, nor is it one who's kind of in it and out of it. So this long-term patience is important. But I also think that they're drawn to more of that relationship approach to things, as opposed to more of a transactional nature. And so I think they're drawn to, we have the resources, whether it's in planning or people that work with this custodial work or trust and estate work behind the scenes. What is different is that in the banking sense, their teaming a lot of times is on the front end. They come into a meeting with a prospective client with their treasury management, their commercial lender, their portfolio manager, the relationship manager, and all these people, and they all have this sort of sliver of the total relationship. So they kind of approach it with all. So it tends to have a lot of bureaucracy to it. It tends to have a lot of everyone's stakeholders, and no one really owns the client. So I think the biggest thing we have to change in their psychology is that ownership of the client. They now own the client. They now get the client. They own them. They keep them. And we have people behind the scenes that help them perform those duties, but we're not out there helping them get and keep the client. That's up to them. So it's really putting them a little more as the spearhead for that client relationship. And I think at first that can be intimidating to some private banker types and people that come from that world. But I think they quickly learn to embrace it and to have that ownership, and it gives them more accountability with themselves and the client.
Oh, that's cool. I like that. Because I think one of the common threads you hear is that there's a lot of frustration. I think you were touching on this. A lot of frustration when you're in those big entities where, I don't know a better way to say this, but those big entities have to manage to kind of the weakest link. And if you are not one of the weakest links, it can be very frustrating to deal with all of the process and bureaucracy put in place, for thousands of other people, that you feel might not apply to you. So coming into a place where you get to feel that sense of ownership is really important. So I love the way you laid that out.
Yeah, I absolutely agree. And I think the key is that, look, we've not been perfect. Even within that group of people, there are some who are sort of like animals in captivity. They're not used to sort of feeding themselves, killing and eating for themselves. And frankly, those people have not been as successful. They're better off staying in that more captive environment. But within that group, if we can continue to discern the ones who really are the hunters, the one who can go out there and bring the clients in, not just wait to be spoon-fed through the organization, boy, those people have been killers. And they brought a lot of their higher end clients have followed them because they were drawn to that energy. So the key for us is to find those who want to be hunters, who want to be more independent. And it's been a great area of success for us.
This podcast is brought to you by Turncast. We make game-changing content for fintech and financial services companies. Learn more at turncast.com.
So one thing I'm thinking about as you're talking is I think lots of firms, want to grow by recruiting other advisors or acquiring other advisors, things like that. You've done both. But for the person sitting on the other side of this, listening to this conversation, who might be going, I don't know if I'm ready for that yet. I don't know if I'm ready for rapid expansion or things like that. Brad, what was it about what you had already put together, what you had already felt and maybe it was the Pagula side of things or whatever, where you were confident that it was time for rapid expansion and that you were able to go execute that in a meaningful way?
Yeah, you're right. And so the worst mistake you could make is be aspirational to grow, bring a bunch of people on, but not have the infrastructure to be able to handle it and to be able to make those people feel comfortable that they can meet those client needs. And frankly, that is part of putting the two firms, Bison Wealth and Bison Advisors, together to make sure that instead of having two adequately staffed people, we have one supremely staffed group that can really handle the growth and frankly handle what we're entering into, which is much more of a hockey stick moment. We've steadily kind of digested some acquisitions and some teams onboarding, and that's ramping more rapidly all the time. We have a number of additional announcements that'll be forthcoming. So I think for us, it's really just advisors tend to have a particular DNA. People that came from a stock picking world tend to like to stay in that world. People that come from, use a lot of separate accounts, they like that world. People that use ETFs or mutual funds, they tend to stay in that world. I'd say the most important thing I've learned is that whether people came from wirehouses or people that have come from private banks, especially private banks, I have been, to be completely honest with you, in utter shock of how simplistic a lot of these portfolios are. You see these clients with 20, 30, 50, $100 million that are in laddered bond portfolios and concentrated stock portfolios, and they have no use of alternatives, no use of protections to the portfolio, hedging strategies, nothing of overlays to create incremental income. They're just not using terribly sophisticated strategies. And so I really think that these advisors have not had a great ability to sort of challenge themselves to be creative. They haven't been able to to differentiate themselves from other advisors out there who are more sophisticated. So the thing that we've really realized is, though there's a lot of talented people at the client interaction side of it, really helping them up their game in the area of alternatives and more progressive strategies. Again, getting them out of that more limiting environment where they're more controlled as part of these bigger institutions. Even in wirehouses, so many advisors coming in wirehouses don't realize how much those wirehouses restrict the activities they can do, the products they can use for their clients, unless those people come on board and pay a lot of marketing support dollars to get on the platform, unless they have a certain amount of wholesalers supporting them, unless they really get a certain amount of infrastructure, there's just strategies they never have access to. So I think when we bring these people kind of out of the shadows and into the light, I think they're so excited about the solutions they bring for their clients.
Okay. I would be remiss if I didn't ask you about this. Milemarker's a technology company. It's something that I love spending a lot of time thinking about. So, you talked about infrastructure for rapid expansion, and I know that means a host of several things, but I know technology is one of the pillars of that piece of infrastructure. So from the seat that you sit in, as you're thinking about bringing on new firms, as you're thinking about growing and all of this type of stuff, how do you think about technology and the role that it plays in growing Bison Wealth?
Certainly, it's a big part and an increasing part, as you said, going forward. I think the thing we've learned back to it, this journey is never without mistakes, right? It's about how you recover from those mistakes and where you move on. I think originally the tendency is to want to accommodate every team that comes on board or acquisition you make. They use this technology platform, they use this one. And I can tell you this, that in the world of aggregators and integrators, there is no question. The market has voted firmly that aggregators are going down in value and integrators are going up in value. If you're not trying to create some synergy with your tech stack, with your operations, you simply bog down and you can't be successful. So we have spent considerable effort into building things out. We use the Orion platform. We use Redtail for our CRM system, but we have some technology consultants, Goodwood Consulting. We have Wagner Weber that performs activities for us. We use a system, Monday, which is for a ticket system where we're trying to make sure if an advisor's having a technology problem or there's a problem with some cash or something in a client account where it's a ticket system to make sure things don't fall through the cracks. And so we've built a lot of infrastructure, including an advisor portal. So when they come in first thing in the morning, the first thing instead of going to the custodial platform, whether it's Fidelity or Schwab, they can also go into our platform and open up the world and see what's all in front of them. So you have to build that in a way that the advisor feels comfortable that all those pieces are taken care of. And I think the area of AI, I wish I could tell you, man, we have figured AI out. We have really integrated that into our system. So I'd say we're very much actively looking at that. We're working on it more on the investment management side than we are on the practice management. But I would say we've got a team working on that as it relates to how to improve the activities. Probably it's going to be more in the go-to-market client acquisition that we see using it more than in the practice management. But it's a huge part of what we do, and it's going to continue to be a bigger part.
Yeah, that was an excellent answer. There's a lot to unpack on all of that. So you said something that I thought was really interesting because this is a big thing that we focus on. But you said that you guys have created an advisor portal so that this is the thing that they're doing that. How did you guys do? Did you build that yourself? Did you partner with somebody on it? And I have follow-up questions there. But
yeah, no, we had some technology support, but it was largely built ourselves. And the whole point here is if someone came out of a wirehouse or a bank, they go down to the HR department locally. Well, if I'm acquiring an advisor in Timbuktu and they've got 3 people or 5 people, there is no HR department there, right? There's no tech guy to come in and fix their computer when it walks up. So you are more remote. So I think it's important that people have access, this ticketing system, to put a request in where people can virtually support them. Typically, almost everything can be solved that way. So I think it's, again, trying to teach these people to be a little more self-sufficient, but having a place to go to. So this portal, they can go on, they can say, hey, I've got a 401k plan. I'm not a 401k expert, but I have a client who needs help, who in our system is a 401k expert. I can plug into that person. Oh, I have someone who needs more sophisticated estate planning, conservation easements, whatever the area might be. Who can I go into our organization who has expertise in that area? And so it's making them, even though they're kind of a hub office or a satellite office out somewhere, it makes them feel more like they're in a hub where they have that expertise there. So really, we didn't see a model out there that was something we could buy that was built, so we built it ourselves.
And I guess then this is did you partner with like an outside firm for that? Do you have your own on-staff development or engineering team? How do you guys handle that?
Yeah, some of both. We have some people that do programming and development inside, but we also do utilize some outside consultants. So it's a combination of both. And look, it will never be finished. It is absolutely constantly evolving, adding new capabilities. And frankly, we put some elements to it out there that sort of looks pretty and nice and great to have, and nobody ever uses it. So, that's the way it goes. But it's a constant evolving thing.
Let me ask you this question too, because it sounds like you're pretty sophisticated on thinking about this. This is a conversation I'm having, it seems like daily at this point, but you talked about AI for practice management or, even go to market. One of the challenges that I see people trying to solve is the regulators don't want, sensitive data being sent out to open AI products, things like that. So, how are you wrapping your head around bringing AI into Bison and making sure that, it's applied to your data in a safe place that you could look at the regulators and say, yeah, this is all kind of contained in one place?
Yeah, I mean, you're right. That's probably a part of it that makes it more complicated. You can get the idea into implementation, but how do you secure it and make sure that it's hitting all those things? And I'd say that's probably why we're taking longer to get things off than what I would have liked to have. And so, I think I just think that area is such a quickly evolving. You have to know what are the areas you have the core infrastructure to do and what you're better off just partnering with the best in class. In our case, much as we have our own tech people, that their information and knowledge gets stale right away. So that's an area we're going outside. So I wish I had more to give you on that as to how we secure it and how we're going to be doing that in the future. But it's frankly a little bit above my knowledge area of expertise. But it's an area we continue to put more effort into.
Yeah. Well, and last question on this, and then we'll pivot on. But you, at least from my research, you can correct me if I'm wrong, you guys are not like a 20, $30 billion, firm out there, behemoth, but you're still investing in these ways in that technology. Was this just something that you looked at early on and said, hey, we're gonna kind of punch above our weight class here on investing in some of these things and not just buying stuff off the shelf?
Yeah, good question. So we're right now today in the door of $3 billion. So you're right. We've just gotten started, and again, you mentioned it. You kind of crawl before you walk, and you walk before you run. We are now focusing on much larger acquisitions out there that will continue to start that. As I mentioned, we're kind of at that hockey stick phase, and I think that's common. If you look at most of the people that have been integrators out there, you sort of start steady, and then you kind of ramp. And so, yes, I think we have a combination of some of the firms we've acquired. One particular had a strong technology bent to them. They were more of a virtual practice environment, so they were already more technological than others. So certainly that was a strategic acquisition in that regard. But we also do understand, back to having a single family with capital, we've got the ability to think longer term. This isn't a build and flip. It's a build and keep and run and manage. The Pagula family has bought sports teams. Man, that's long tail investing. That's not short tail investing. They drill holes in the ground and hope that there's oil and gas there. Again, long tail investing. So we haven't approached this as a quick buck artist. We've approached this as people who want to be in this space, who want to build it to last. And I think if you start with that attitude, you're much more likely to like your outcome.
Well stated. I love that. So it's a perfect segue into, the next segment of the show. So we're talking about technology. We're talking about investment. It's hard. And we're talking about AI. It's hard to not talk about those things without thinking about the future. So Brad, go ahead and get out your crystal ball for me.
Okay.
And let's look a little bit into the future of where you see the industry going, where you see some of the trends that you're trying to, get in front of or get on top of right now from the seat that you're sitting in.
Yeah. So there's several different areas, obviously, go with that. One that I would say is a phenomenon that I think there's a lot of people that need help in lots of different areas. And one of the focuses for us is trying to get into some of these retirement assets before they go out. So a focus for us has been this self-directed brokerage world inside of defined contribution plans. So many people are waiting to sort of help those clients after they roll out of their 401k plan. So we've got some strategies built around trying to get to those clients before they get out. You can frankly build a relationship with them when there's less competition and there's less, the client needs more help at that time. And so we're definitely putting some efforts towards trying to get to that. That can help create opportunities for these clients, because what we know is somebody may only have $500,000 in their 401k plan, but they very likely have a bunch of assets spread across other places, be it other 401k plans, other after-tax solutions. But if you pull all those together under a common platform, you really can build a very nice client. So that's an area that we're putting some effort into. And I think another thing that we've really focused on with our advisors, we believe the market has a certain amount of volatility fatigue out there. If you think about the market since 1980, so some 44 years, the market's had 21 drawdowns of 10% or greater. So for people that are in their 60s, 70s, 80s, they've seen 21 drawdowns of 10% or greater, and 6 of those have been 20% or greater, with the average of those being 35%. So these people that are where the wealth in this world is controlled, largely the 60s, 70s, 80s, have seen a lot. They felt a lot of pain. But now they have a lot less runway in front of them. They have 5, 10, 20 years left. And the thought of going backwards on their equity portfolio, 35, if you lose 35%, you have to make 54% to get back to even. So we're really putting a lot of effort into trying to build portfolios that aren't such binary outcomes where you can win a lot and lose a lot, ride that Wall Street roller coaster. We're really focusing on building products that have protections built in, that give them less of a binary outcome and more of a disproportionate up to down. So that's a huge focus for us, and we think it's right on with what the wealthy clients want out there.
Excellent. I love that. I love the term volatility fatigue because I think that's very real. It's interesting because even as you say that, I mean, there was a ton of volatility, but yet also, from 2008 to 2018 or 19 or whatever, it was like the greatest bull market we've ever seen, probably somewhat artificial, but, still nonetheless, unbelievable and unprecedented growth, but still plenty of volatility throughout that time.
Yeah. And I think volatility itself isn't a bad thing, but we like upside volatility a little more than downside volatility. So I think, my background, as I mentioned earlier, having more of an investment management background, has led us to build some proprietary solutions for our wealth clients to use for our advisors to use for their wealth clients, has generated some products that are really unique. And to be honest with you, solutions we wouldn't have even tried to build had we have not had advisors saying, I would like a product that looks like this, that has maybe some of the elements of a structured note, but has some of the elements of a straight up equity portfolio, that has protections of like an annuity. So we've built some strategies that really are cutting edge, that I think, again, are innovative, that I think are very appropriate for client portfolios today.
All right, we're going to move into the final segment of the show, which is called the Milemarker Minute. It's a series of lightning round questions, fun and lighthearted, aimed at getting to know you a little bit outside of the Bison Wealth side of things. So you ready for the Milemarker Minute?
I'm ready.
Excellent. All right. What is the most underrated thing about Atlanta that the rest of the world should know?
Oh, it's beauty. I'm sitting here looking at Atlanta, and of course it's fall, so the trees are turning. But when I moved to Atlanta, which was in 2006, I had no idea how wooded and densely wooded it is, at the hills, the rivers, the bodies of water, the lakes that are around it. So I thought of Atlanta as just being, another southern city, and a lot going on, home to a lot of Fortune 500 companies, but it's really a beautiful city, and it's one that I've really enjoyed. The seasons being sort of a long fall, a long spring, kind of a short winter, and a little bit of rough summer in the middle, but it's just a super livable city.
I love it. If you could travel one place in the world you've never traveled to before, where would you go?
Ooh, I think that would be the Far East. I've never spent any time in that world. I've done a lot of the traditional European spots and a lot of the Southern Hemisphere stuff, but I think the Far East has interested me.
You have a weekend for a vacation, a long weekend for a vacation. Are you choosing to go to the beach or the mountains?
Probably both, but mountains. We're avid snow skiers. I have 3 children, and 2 of the 3 are snowboarders. So my family enjoys getting out and getting some exercise. So we probably prefer a little more of the active vacation style as opposed to the laying on the beach style.
Love it. Okay. And then my last question for you is, if you were in an alternate universe and you were to do a different career from financial services, so in this alternate universe, what career does Brad Ball have?
I am a competitive person, and I find a lot of people in our industry tend to be sort of athletes in background because it's a similar DNA, that sense of competition and being hunters and killers. And so I suppose were I to have the athletic prowess rather than just being a weekend pickleball warrior, it would probably be some kind of a athlete for a living. I do love that constant competition.
Excellent. All right, Brad. Well, that is the end of the Milemarker Minute. I really enjoyed the conversation with you. I think you dropped a bunch of insights and a lot of cool, interesting tidbits. Thank you so much for coming on the show and sharing your knowledge with the Connected Advisor community.
No, thank you for your time, and it was a ton of fun.
Absolutely. All right, everybody. That has been another episode of the Connected Advisor. Please make sure you click follow or subscribe wherever you're listening to this. And if you'd be kind enough, please leave a review so that other people can hear great conversations like this one with Brad. But until next time, enjoy every mile.